Just a day before the Olympic Games begin, the Bank of England decided to break a record of its own. It pushed its benchmark interest rate to the lowest level in the central bank's 322-year history. And the scope of the accompanying package surprised investors. But in truth, the bank's chief economist Andy Haldane had already indicated that policymakers would err on the side of aggression. And last month, he said he would rather run the risk of taking a sledgehammer to crack a nut than taking a miniature rock hammer to tunnel out of prison. And this was clearly the sledgehammer approach. The rate cut was expected, but the bank's quantitative easing program was restarted earlier than many economists had predicted. And corporate bond purchasing was another positive surprise, even if the size is for now modest. And the term funding scheme is aimed at ensuring banks quickly push through the benefits of the rate cut to borrowers. And the 10-year gilt yield duly fell to another record low of 0.63%. It is now more than halved since the UK voted to leave the EU, as investors pricing an ultra-cautious monetary stance for years to come. But even a sledgehammer will work no better than a rock hammer against an iron wall. Mark Carney, the Bank of England governor, indicated that another rate cut was probably forthcoming, but reiterated that he was no fan of negative interest rates. Now, investors have soured towards sub-zero rates anyway, so that may be wise, but it does limit the bank's options. The TFS is an intriguing new tool that has no theoretical low bound and could prove powerful, but its success is uncertain, and the impact of simply buying more bonds is dubious. And after the latest round, the bank will hold about a third of the entire gilt market. And tumbling interest rates will also pile more pain on UK pension funds, which had already begged the BoE to refrain from more QE. So much of the onus to ameliorate the economic downturn will fall on the UK government and fiscal policy. The upcoming autumn statement has really been more important.